Let's talk about continuation patterns, okay, or CPs. From now on, I'm going to refer to continuation patterns as CP, okay, continuation pattern, CP. And a continuation pattern, we're looking at the pound dollar on a daily time frame. A continuation pattern, or CP, is a pause in the market before the price resumes the underlying trend. So we can think of this pause as an accumulation of buy orders for longs or the distribution of sell orders for shorts, okay? So it is not a valley or a peak. So this is a clear valley, as explained in the valleys, the lesson. This is a clear peak, okay? And here we've got nothing because we do have 5 candlesticks on the daily time frame ranging in the same price area, and it is not telling us if this is going to be a valley or is it going to be a CP, okay? Because it cannot be a peak, okay? Because for a peak to exist, we need a large rally with ERC candles, and this is not going to happen. Unless price does like this, creates a large ERC and then drops, we never will have a peak over here. So if this stays like this could become, imagine that on Monday, price opens and then starts to rally like this. This could become a valley, okay? But if it continues to drop, it will become a continuation pattern. So a continuation pattern is usually a formation that shows sideways price action, and they are usually corrective moves before the price resumes the prevailing trend. So unlike reversal patterns that indicate a change in the trend, continuation patterns are like patterns that show a temporary pause, like this one over here, a temporary pause before, okay, the trend continues. So the price action stalls for a few days or a few candlesticks, and then it drops. Okay, price rises here strongly. This is a peak. This is not CP. So what we're going to do now in this lesson is that we're going to talk about continuation patterns, how they are created, what they are made of, and what you need to pay attention to, which kind of candlestick patterns are most usual, continuation patterns, and how to distinguish them from valleys and peaks. It's usually very clear, but most traders struggle with it, okay? So here, for example, let's switch to the 1 hour time frame, for example, on a pound dollar, okay? So see what's going on here. So on the 1 hour time frame, we are going to start, as always, we're going to start from the right side, okay? And every time we go to the left following price action and we bump into small candles or a large movement, then we stop because we need to consider if they are CPs or valleys or peaks. In this case, we are looking for CPs. And to understand better what a CP is, let me explain to you, because a CP is not just a pause in the market, okay? A CP is made of 3 features, okay? It's composed for a bullish CP, we need the rally, the leg in. We need 1 or more basing candles or engulfing patterns, which is the engulfing patterns are the most common patterns as CPs, okay? And like this one over here. And then we need the large movement, okay? The leg out. So the continuation pattern is not just the pause, okay? It's the pause and need to be followed follow note. The leg out, by the leg out, it needs to be followed by the leg out, but the preceding candles should be also large candlesticks, okay? So it's made of 3 features, okay? The legging, base, leg out, and for the bearish CP, legging, basing candle, leg out. And there is a 4th feature that needs to be available for a CP to exist, okay? For a clear CP, an imbalance in the future. I mean, we're going to be talking about the imbalance. And for a CP to exist, for a continuation pattern, because let me explain. I mean, every imbalance, you are going to learn about imbalances, okay, how they are created, but every imbalance is made of strong impulses, okay, but not all impulses are finally or make into convert or are, let me explain it another way because I'm just mixing up my mind here. So every impulse, every imbalance is made of impulses, of strong impulses. We've got strong impulse, we've got strong impulse, okay? Every imbalance. But not every impulse becomes an imbalance, okay? So, and that's crucial to understand. We are going to be doing a chain analysis exercise where you're going to learn about that, the consolidation wave concept. We're going to talk about many other concepts that will help you understand that. So, and that is important because we've got the leg-in, base, leg out for a CP. This is the basic structure. But with this rally that happens here, the leg out, we need at least one entire candle not touching the basic structure in order for this impulse to be considered an imbalance. That's one of the features. It needs to eliminate something and everything, but that will be seen in other lessons. But we need, for a CP to become an imbalance, it has to consolidate away. This is the concept of consolidation away. So for example, here, okay? So we've got, let me enlarge this. We've got a drop, base, drop, okay? So this is the leg in for a bearish CP, okay? And this is the leg out. And right in the middle, we've got a little tiny candlestick over there, which is that one, okay? Oops, what happened there? That's the CP, okay? Unfortunately, it just didn't pull back to that one, okay? But this was in a downtrend on the 1 hour time frame, tried to pull back to that area. So this is the perfect definition of a CP. We need the leg in, basic structure, and the leg out, okay? And this candlestick over here, at least one, we've got many. All these candles are considered the consolidation away, okay? We only need one, but the longer it takes to consolidate away, the better the higher the probabilities of this area of supply, if it is supply, okay? Imagine this is supply, okay? We need to do the chain analysis to understand. Look left, everything. But imagine, okay, this is supply. Because remember, every supply level is made of a great impulse. But not all impulses are supply levels. So if we consider this a supply level, okay, it needs to have the CP, continuation pattern, needs to have the leg in, the basic structure, the leg out, plus the consolidation away. We need at least one full candle that is not touching the basic structure, okay, after it closes. So if I use the reply functionality, so right now, okay, and I move forward, one candle, okay. So now that we've got this candle closed, the black one, we consider this one over here a valid CP, okay. If it removes something on the left, we do the chain analysis, but we are saying that this is an imbalance, okay, a valid imbalance. We assume this is an imbalance, okay. So in order for this to be an imbalance, like I said, the CP needs to have the leg in, base, and the leg out, and consolidation away. And the same is true for the valleys and peaks, okay? But here we're talking about CPs. So summing up, the CP needs 3 features and a 4th one to be considered an imbalance. The 3 features are rally, leg in, base, leg out, 1, 2, 3 features. And if you want this to be an imbalance, we need the 4th feature, which is the consolidation away, a full candlestick, not touching the basic structure. That's what a CP is, and when it is considered an imbalance, okay? And for the bearish side, we've got the same, leg in, basic structure, okay? And then the leg out. So we've got first feature, second feature, the third one, and then the consolidation away should happen here if we want this to be ever considered as a supply level, an imbalance supply level, okay? Continuation patterns are quite fundamental in a trending market because they can tell us that the underlying trend is so strong that corrections don't even happen. So the underlying trend pauses for a while, like in this scenario here on the 1 hour. It pauses for a while, okay? And it then creates a new leg out, telling us that there's a strong impulse there and there's no intention of the investors to keep on buying, okay? And this is like a mess. And like I said, the longer it takes for the price to reach the origin of the impulse when we still have a downtrend, the better, okay? It means that the powerful in 2 candlestick, in 2 hours, this movement was created, but it took like, I don't know, like how many candlesticks? 28 bars, 28 hours, more than a day, for price to try and reach. Imagine that it was reached, okay? So imagine that this was reached, okay? It was wider. So, and that didn't happen. So it means that if it takes 28 candles, okay, to rally and 2 candlesticks to create the movement, obviously the bears win. And those are the things we want. We want the strong impulses to be stronger than the corrections. And this is what I'm talking about in the impulses and corrections lesson, okay? So that is crucial to understand. As you can see here on the 1 hour, we can see that we have strong impulses, then corrections are pretty average, slow, very strong impulse with that large candlestick. That large candlestick could be a supply level there, okay? And that was, let me see, because this is not working now. I don't know why. Okay, and it was reached there. It could be a supply level. We need to do the chain analysis. But what I'm talking about is that we need these strong impulses. And as you can see, the prevailing trend is very strong impulse, correction, pretty poor, strong impulse, okay? Correction, strong impulse, a small correction, and then, well, it starts to slow down. And then we start having strong impulses again, and then bullish, okay? Which is telling us, okay, this is going to reverse and reach that impulse up there. And then this is a mess, and then there is like a strong impulse with a large candlestick that one provided us with a pullback to that impulse over there. We are not talking about planning trades here, okay? I'm just talking about price action, impulses and corrections and what we need to see, okay? So we are talking about CPs, okay? So if we continue going down here, okay, we see here that we have a large movement, which is the leg in, okay? See, that's the leg in. Then we've got a few candlesticks over here, okay, small candlesticks, and then the large movement away, the leg out. So the CP would be something like this. I'm going to connect this because it's driving me crazy. The magnet is better. So this would be, okay, the CP, okay? So this is the kind of patterns that we are talking about when we consider CPs. We want the large movement, leg in, basing structure, and then leg out. And as we will discuss in this coding lesson, okay, we want the basing structure to be made of 6 or less candlesticks to consider it as a strong imbalance. And this one has 1, 2, 3, 4, 5, 6, 7, 8. This is not good, okay? So what happened is that these, because it's not good, it was eliminated, okay? So here, like I said, we want another impulse, large ERCs, okay, on the 1 hour, basing structure, and then large ERC, leg in, base, leg out, and that happened right there, okay, right there. So the consolidation away happened on this particular candle. Let me zoom in a little bit so you can see what I mean. So that candle over there, you can see it didn't touch the proximal line. So that was the consolidation away. We don't know if this is an imbalance or not. I doubt it will be an imbalance, just an impulse. Because remember what I said every imbalance is made of an impulse, but not all impulses are considered imbalances. So we need to do the chain analysis, which you will learn in another lesson. Okay, but here we're talking about the identification of impulses, of CPs, continuation patterns. So on the way up here, we've got a rally, a base, okay, and a rally. And then we've got another base, and then another rally. So these two over here are considered CPs, okay? You're gonna learn how to draw them later, okay? But I'm just here identifying the structures, okay? I'm not teaching you how to draw the basing structures, okay? The base structure, the basing area should be 50% candles. That means that the body width should be smaller than the two wicks together, okay? And then within this structure, we could have other candlesticks, even with wicks up and down. That doesn't mean there are valleys or peaks, okay? But we have an area here, like I said before, it's a continuation patterns are formations that show sideways price actions, okay? And this is what we see here, and this is what we see here, sideways, 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 okay? So remember, okay, we need a large move, okay, with ERCs, a basing structure made of one or more candlesticks, where engulfing patterns are one of the most common, and then another large move, okay? So leg in, base, leg out, like here, leg in, base, leg out. Scoring the imbalances or detecting or learning if this is an imbalance and this is an imbalance is another lesson, is another concept, okay? So we are assuming here that this is an imbalance, okay, just for the sake of simplicity for the lesson, but we want this to be an imbalance, and then we want the trend to be with us, blah, 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 etc. Because if we've got a downtrend on the bigger picture, we can't go long at demand levels. So, but that's another thing. That's multiple time frame analysis, and one time frame alone is not enough to make a trading decision. So that should be taken into consideration, very serious consideration. Okay. So this is like, let's try and detect more. Okay. So let me delete these boxes here, and we start from the left. So here we've got another CP. Okay. This is obviously not a CP, large wicks and everything, but here we've got this one ERC, you see, that's the leg-in, base, two little tiny candlesticks, okay, 50% bodies, and this is what we've got there, okay. That here was hit and it dropped and it played out for 4 hours and then it was eliminated, okay. So would this be an imbalance? Yes, it wasn't an imbalance. We would draw it like this because we don't want large large pins. So why is this an imbalance? So I'm going to show you why, what you're going to learn later, why this is done, but it has to do with the connection of several peaks, two consecutive peaks. That's a peak. This is nothing, CP, CP, and this is another peak. Well, so when we connect two peaks, okay, then the origin of the move creates an imbalance right there, and the elimination of that imbalance creates another imbalance. And that one played out a little bit for 4 hours, okay, and now it was eliminated. So, but this is what you're going to learn later about when you learn how to draw trend lines, how to locate imbalances, how to score imbalances, the trend, multiple time frame analysis, etc., etc., etc. And this is what we usually do when we are doing the coaching program throughout a year and a half, or even 2 years. It depends on how fast the trader is, where he's going to be like assigned many exercises every day, repetitive ones, because this is the only way to learn. And I'm going to show you how it works. So in the education program, online education program, also for the live trading program, where you have Zoom sessions with me, you are going to start by doing exercises on how to draw valleys and peaks and CPs. Then we are going to move to trend lines. We're going to move to how to draw the imbalances. After that, the chain analysis, what is the trend, how is defined. You are going to have to explain to me how that works based on all you have learned. And then from the trend, you're going to move to scoring the imbalances. Then you're going to do the same, all this, you're going to do it and make it in a very important exercise. All this will be like moved, or all this knowledge will be applied to create the multiple time frame analysis, okay, in several time frames at the same time, drawing the imbalances, scoring them, trend lines, valleys and peaks, blah, blah, blah. And then the last one is planning a trade, okay, where you will actually say, okay, I am planning a trade at that imbalance, demand level, supply level, based on the fact that the multiple time frame analysis tells me that we've got an uptrend, the imbalance scores really well, the trend is up, and the chain analysis is also true, gives us an imbalance. So everything is connected until we plan a trade. And this takes like about 1-2 years, okay? You may say, oh, wow, why so long? Well, if you go to the university, it's going to take you more than 5 years. And, well, you know what I mean. So if we continue, okay, those RCPs, let's change the time frame. Let's take a look at the weekly time frame on the pound dollar to see what we've got, okay? So on the weekly time frame, we're going to start from here and we're going to go back, okay, to see where the CPs are, okay? So we start from here and go up. This is obviously a large move, okay? So at least we've got the leg out, okay? We've got the leg out. We've got a basing structure over there, and we also have the leg in. So since this is a 50% candle, it means that the candlestick body, the width of the body, is smaller than the sum of the two large wicks. Okay, and the same is true for this one. For that particular candlestick, the white one, the body, as you can see, is way smaller than the two wicks together. So these two candlesticks, okay, are part of the CPs. Okay, so we've got that supply level, the weekly is in a downtrend, and this is the latest CP structure. Okay, if we continue to go up, we stop here. We get again the same thing. We get like 1 and 2, okay? We 1 and 2 candlesticks where their bodies, okay? Their bodies are 50% bodies. That means that the width of the bodies are smaller than the sum of the bullish and bearish wicks. So we've got there, that's the structure. And it's preceded by a large ERC. So leg in, base, leg out. Leg in, base, leg out. Those are bearish CPs. Then we continue to the left, okay? And then we've got another one. We've got 150% candle, another one over here. So that's another one, okay? Leg in, base, leg out. This leg out is also the leg in for the next CPs, okay? And then we've got the basing structure and the leg out. And when we get to the top, obviously that is not a CP because it's made of a rally, basing structure, we get an engulfing pattern, and then a drop. So that's a peak, okay? So this one over here, you might say, oh, well, this is a valley because we've got this drop-based rally. But as you can see, this candlestick over there, then we've got two basing candles of the same structure, and this wick over there doesn't make this a valley. We want this to happen. This has nothing to do, this pattern over there has nothing to do with this. As you can see here, we've got the bodies closing below the previous body, full bodies below full bodies, full body below full bodies. Here, we just got one candlestick and the next one can't even close. And we don't want only a close below the close, the previous body. We want full bodies, okay? Like this, full bodies below full bodies for this to be a valley. And that didn't happen. And this is very important, okay, to understand. So here, we've got like two initial basing structure and then we've got full bodies underneath those. This is a valley. This is not a CP. This is a valley This is a CP. Okay, so we've got CP, CP, continuation pattern, CP, peak, CP, valley, valley, and here we've got rally, base, rally. This is also a CP. And here on the left, we also have the same here. Drop, the leg in, large ERCs, 1 and 2 basing candles. I mean, their bodies, these two bodies are smaller, let me zoom in, much smaller than the sum of the two wicks. Okay, so we've got another continuation pattern, and I could continue on and on doing this on the weekly time frame. This is the same for the 1 hour, as we could see, the daily and everything. So let's switch to another one, because there are so many combinations, price action combinations, candlestick patterns combinations, that, I mean, the more you need to analyze thousands of scenarios to try and have as many scenarios so that your brain starts creating some patterns. So when you bump into something that it looks strange, your brain's going to tell you, no, this is wrong. Okay, this is not a continuation pattern. This is something else. Okay, so you need to be exposed to thousands of scenarios. So this is pound dollar. Let's take a look at a stock. I don't know, like an important one, Visa, maybe. Yeah, Visa Incorporation. So on Visa, this is what we've got. Okay, this is a weekly time frame. Well, okay, let's look at the weekly time frame. Let's look at the weekly time frame. So here, price action there is a mess. We don't know if this is going to be a valley, a CP, or a peak. If it drops, it's breaking all-time high. So this is right now unknown. Okay, the longer it takes to distribute or accumulate, the stronger the breakout on the way up or the way down. So we continue to go left. Then we find this is a mess, because like I said before, we need consolidation away. We don't have a single candlestick staying away from the previous impulse. So here we've got a structure. Okay, and as you can see, all these candlesticks, they are like, how many bars? We've got 9 bars, 9 wicks. For 9 wicks, Visa has been doing nothing in this area between $300, ranging between $300 and $321. Okay, trying to break all-time highs or retrace to there. This is an imbalance, as will be explained in the lessons, because it broke all-time highs. And is this a valley? I mean, most traders that have been starting to coach will say, yes, it's a valley because it dropped and then it rallied. Nope, it is a CP. Okay, so the engulfing patterns are one of the most common patterns are continuation patterns. Okay, and this is it. I mean, in order for this to be a drop rally, as explained in the valleys and peaks lesson, we need larger than usual ERC candles. And this is the average width for an ERC candle. This is larger than the usual ERC candle. This is average. Okay, this is average. It's pretty average. So we need a very large. I don't know if we're going to be able to find here. So if we get candlestick like this, there, up and down, then it's a valley. But right now, this is a CP. Okay, same structure here, same trading area, price area. So it's sideways price action. There's no corrective move. There's no full candlestick bodies closing below the previous structure. So all rules tell us that this is a CP. Okay. So we have been waiting for price to drop down there, but it looks like Visa is going to continue to rally. So I'm probably creating imbalances. So here, if we go to the left, this is clearly a valley because we've got the drop base rally. So this is a drop base rally, valley. This is the large ERC, the leg in for the CP, the basing structure for the CP, and the leg out plus consolidation away for confirming that this is a demand level responsible for breaking all-time high on Visa. Okay. So if we continue to go to the left, okay, we've got another structure there. Okay, and a structure which is made of a large impulse, okay, ERC, basing structure, doji, and then a large movement. So leg in, base, leg out. And this rally over there was responsible for breaking all-time highs. So as you will learn in the lessons about when we describe the creation of imbalances, demand levels after breaking all-time highs, this is an imbalance, okay? And we were waiting for this to happen, and then it happened, and it played out. I recorded videos on YouTube and for Instagram too, and Facebook, and obviously on the website. So if I go to the website, I go to Visa, it should be somewhere. So let me go back. This is the imbalance. Okay, it's there, but let's go back and see where that imbalance is reached. It was reached in September 2024. So we should go, okay, over September, October, this is October. Okay, where is it? Okay, over there, over there, over there. Okay, there it is. September 26th, weekly uptrend, aggressive demand on the weekly took control. We are expecting the rally. And then a few days later, uptrend, imbalance, one mentioning the lapse update is in control, trying to play on. What a reaction this week. I'm talking about this large bullish ping candle, which is great. And then price starts to rally. I set my alert to be alerted when price is moving up and update and trying to rally again. And look at this. This is like what we do as and forget, okay? Then new areas of demand are created on the 4 hour, etc., etc. So this is obviously shared with you after the fact for those who are also part of the Trade Ideas service. Those who are coached individually have access to this automatically. So what I'm trying to tell you is that there are very mechanical rules that will tell you what price action is, if it is a CP or it is a valley, and it can help you pinpoint imbalances and plan these imbalances, the trades, weeks and months before in advance, okay? So this rally here happened at the end of August 2024. The rally stopped in the middle of September 24, and then at the end of September 24, it was reached as expected, and look what happened. It has rallied already like 20% based on this imbalance. Unfortunately, it didn't reach this one over here, but those long-term traders holding this trade are making good money, okay? So what I'm trying to tell you is that even though these exercises and these patterns might be tricky to detect, okay, because you are probably dragging some past knowledge from other strategies. You might be seeing things differently, and then you will have probably indicators, EMAs, and everything on the chart. And as you can see, there is nothing on my chart, just price action. And with the help of the trend line and the chain analysis and the realignment rules, you will be able to pinpoint with laser beam accuracy imbalances that will play out weeks and months before they were planned. I mean, it's just crazy how this can happen, okay? And if we go, I remember like one I analyzed too on Bitcoin, for example, try to break all-time highs. So we've got another CP here on the weekly. Okay, let me delete this, probably from another recording that I made for the lessons. So here, this could be anything. This could be a peak, probably will break all-time highs. So we don't know what it is. This is price action. Bitcoin has been ranging for 7 weeks there, trying to break all-time highs above 110,000, 110,000. So if we go back in time, okay, we stop when we see basing structures or strong impulses, and we've got a weekly demand level over there. And that one over there is ACP, large ERC, legging, basing structure where the candlestick bodies are way smaller than the 2 wicks together. That's a 50% candle. And then we've got a large rally made of 1, 2, 3 large candlestick bodies or ERC candles, extended range candles. And now we've got all this consolidation away together with this one. So this would be nice if it would have happened, but it didn't happen. This level is located at 73,600. So if we continue to the left, we've got another one here. Rally, base, rally, another CP. Okay, and this obviously is not a CP. We've got a drop, a base, and a rally. And as you can see, this is like a block, okay, where the open and closing candles close and open, and then we've got a full body underneath, and then we've got the void, the bullish void for this to be considered a valley. Okay, so this is a valley, this is a CP, and this is a CP. Okay, this is for Bitcoin. If we go to the monthly time frame, we've got, let me delete that one, which belongs to the weekly. It's tried to break, it looks like this is going to break all-time highs by the looks of this candlestick. It looks like this. Okay, so here we go back. If this happens, price starts to rally, then this will become a CP. Okay, there's no strength, bearish strength on Bitcoin for this correction to happen. This is a a sideways price action formation, and this could become a continuation pattern because also the CPs are one of the most common. The engulfing patterns, bullish and bearish engulfing patterns, are one of the most common patterns at continuation patterns. Okay, candlestick patterns. So this, oh wow, this is a valley. I mean, closing, I mean, pin down, 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 and then a valley. No, it is not a valley. We've got these candlesticks over there, opening and close prices, okay, there, and a wick like this is not enough. We want large candlestick bodies or a very, very large wick like this. One sec. Very large, okay? Larger than the average, and there is nothing here on the chart. So this is a continuation pattern that is being formed or has been formed on Bitcoin, okay? The same way this is a continuation pattern that we also called a few months ago. We've got the rally, large ERCs, candles, basing structure, almost a doji, and that's the candlestick. And as mentioned on the analysis that I did at the moment, we were waiting for that, and look at that. The proximal line was at $48,969, and it just reached that price to the tick, okay? So this is why it's important to understand where these imbalances are located, because they play out magically. I mean, I cannot stop to be like amazed at how these imbalances play out, okay? And if we go to Bitcoin, it should be somewhere, because I remember I shared this, and that probably was like August. Let's go back to August, December, October, should be like August. Let's see if this is the last pause or not. August, 4 hour demand levels, but okay, there, monthly demand level, okay. Monthly demand level mentioned last July 24, so we go to 24, July, okay, 24, should be somewhere, okay. I don't want to spend more time here, but there it is, okay. Trying to reach that area, and then as you can see, it just was reached. So you can see the power of continuation patterns, these patterns that become sideways, okay, and then suddenly they break out, okay, and probably this is going to happen on Bitcoin too, but this is not supply and demand trading, this is breakout trading, breaking all-time highs where Bitcoin is the most expensive ever, and then you buy it. So that's another strategy. Okay, completely different to supply and demand. Supply and demand is the art of locating continuation patterns and valleys and peaks that accomplish something, strong impulses that score high in a trending market. We have to wait for the pullback. Okay, like here, we waited for 5 months, but then after that, Bitcoin rallied about 120%. So if you invested $10,000 over there, you would have doubled your investment like 5 months later. Okay, so that's how it works. If we go back in time, this is not a 50% candle. We need it there. Okay, so all this, as you can see, we've got a rally ERC. Then we get these spinning top, these candlestick over there, 50% candle. The next candle can even close underneath, can close. It closes, but we want full bodies underneath. So all these candlesticks over there are part of a continuation pattern. This is not a valley. All these, this is like, let's say, I often use the concept of mother candle. So after a rally, we get a mother candle, the first pause. And if all the candlesticks next afterwards, okay, stay within the same range without having full bodies below the structure, this is not a valley or a peak. This is a continuation pattern, okay? So all this is a continuation pattern. Price did not pull back to it the same way that it did on that monthly demand level, okay? So we continue, okay? Let's go to here to the left, okay? So on the left, you will see lots of continuation patterns on Bitcoin because it's a very volatile cryptocurrency. Cryptocurrencies are very volatile and continuation patterns are quite common. So here we've got again leg in 1, 2 basing candles. Why basing candles? Because the distance between the open to the close, the body, okay, is smaller than the 2 wicks together. So this is a continuation pattern. Okay, this is not a peak. Okay, you might argue, okay, but it printed a high, so this would be like this. Or you had forgotten to and squeeze the chart, reset the scale, and then you see, oh, well, this is a valley, a peak, sorry. And if you do like this, oh, wow, this is a peak, obviously. No, it is not. Reset the scale. And that is not a peak, okay? So obviously, this is a peak, large ERC base drops. And if we go here to the left, because we are trying to detect CPs, this is another clear example of a CP, okay? We've got a large ERC, this is a lagging base, because we've got 2 little tiny candlestick bodies whose bodies are smaller than the 2 wicks together. So the imbalance is going to be like this. And look at the strength of this imbalance. 1, 2, 3, 4, 5 candles, 5 months, and it tries to reach it, falls short of it, which would have been great, and then it reverses and it starts creating new CP, and then this one is playing out, blah, 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 okay? But this would have been great. I did some analysis on Bitcoin trying to explain why we wanted that, but it just reversed out of nowhere at $15,400. Well, no problem. So this is Bitcoin, okay? The CP, so we continue to the left, obviously this is the origin of the move, okay? And we've got like the CP over there at 4,000, okay? And then it played out. So that's for Bitcoin. And if let's take a look at another cryptocurrency, the second most important cryptocurrency, which is Ethereum, okay? We've got like 43 minutes already on CPs, but it doesn't matter how much time we use. We're going to find always new scenarios which are important to understand. Okay, the more we analyze, the better. So on the daily time frame, for example, here on the daily time frame, this is like a drop-based drop, but as you can see, there is no consolidation away. The movement, remember, for this to be, for example, a supply level or an imbalance, we need drop base. The basic structures are there. As you can see, there is not a single candlestick closing away, not touching the potential base. So this is nothing, but this is obviously a valley. Drop, base, rally, okay? So there is no CP here. This is not a CP either because we've got a drop, large ERC, okay, closing below the previous one. So we've got 1 block of price action information, and then we've got 2 blocks, second block, and we've got the bullish gap. Sorry, the bullish void. So this is a valley, okay? And this is another valley too. There's no CP over there. So when we do this and connect the trend line like this, which is what you're going to learn in the future with the trend line, 2 valleys, consecutive valleys, the origin of the move creates a supply level, okay? But that's something else that we're going to do. later. So let's use, we were using the daily, okay? And try to locate clear CPs. So here, for example, we've got large ERC, leg-in, basic structures. You can see price action, even though we have like wicks. You see those wicks going below the previous candlestick bodies? That doesn't mean that we've got a valley. All this here, okay, these price action over there, all these candlesticks are part of a CP, okay? That's it. Rally, base, rally, and there is consolidation away too, okay? If we continue to going to the left, there is no CP here, nothing there, and then we've got one over there. So let me lock in the zoom, okay? And this is a rally, see, large movement, ERC candles, extended range candle, large candlestick bodies, and then we've got a 50% candle, basic structure, a pause in the market, sideways, and then we've got the engulfing pattern, which is one of the most common candlestick patterns at continuation patterns, okay? So it would be drawn like that, okay? So that's another CP. And then we zoom out a little bit over here. Try and locate easy ones, okay? Oh, it's not easy ones to spot here. I don't want to go more. Okay, let's take a look at another one. I don't know. Let's take a look at Brent, for example. Brent futures. Okay, so Brent futures, I'm going to use, for example, the 1 hour time frame. So in the 1 hour time frame, we're going to start analyzing price from here. This is a mess. This is nothing. Okay. This is a peak. Okay. This is another peak. This is a valley. Okay. And here we've got the rally, base, rally. This is not a drop. Remember that for a drop rally to exist, we need a very larger than average candle, like something like this, super large. This is not. And if this is a medium ERC candlestick body is followed instantly by an engulfing pattern, it makes it a CP, okay? So here on the left, this is a mess, really. And then we've got a clear picture of a CP here. We've got rally, okay? Base, there. And then a rally. So large movement, leg in, basing, leg out. So this could be drawn like this. Okay. And look at that. Right, drop there, and then it has been the one that has played out for the last couple of days. Okay. So if we continue to the left, okay, we've got another one over there. We've got a rally, little tiny candle on the 1 hour, and then a rally. So that would have been the CP, okay? You can see that the difference between this one and this one, it's very clear. And also about the one underneath. Oh, let me draw it too. Rally, base, rally. We've got two little tiny candles over there, which are also a CP, okay? So, as we will see in the scoring lesson, okay? This one should be like this. The close, and these candlestick here is like average normal ERC candles, the width of the candlestick body. This one is way larger, and this one almost double, and this one here, even though here we have 3 candlesticks as departure, 1 candlestick, large one, and 1 large one. So 1 very large, 1 medium, 3 large. So this is strong, this is poor, weak, this is strong. So this is okay, this is not okay, this is okay, okay? So this is what scoring will be in the future, in the future lessons, okay? I'm just seeing it and talking about it. I shouldn't be doing it, but well, it's just like so obvious that I don't think it's gonna be a problem, because we're gonna repeat this in the course when we do the scoring. Okay, so I'm just seeing things, and it doesn't matter because it's going to help you understand what's going on. And right now this is happening live, okay, like 2 days ago on Brent. So if we take a look, let's take a look at the daily time frame on Brent. So on the daily time frame, what have we got here? So here, as you can see, we've got a rally. This is a potential CP, but then there's no consolidation away. There's nothing here. All this is like, you see, it's glued together. There's no separation like this one over here. We've got a rally. It bases or pauses for a few candlesticks, and then it rallies, and this is the consolidation away. All these candlesticks at the top. So here we've got the CP, okay? Legging, basing structure, sideways, the leg out. Whereas here we've got a legging trying to base, but the leg out doesn't even happen. Okay? So we should have like an alert set down there because price might drop down there from there, continue to rally. Okay, so that would be the continuation pattern for Brent futures on the daily time frame in the middle of in January 2025 when I'm recording this course. Okay, so if we go down here, this is a valley, nothing, a valley, drop, base, rally, and here we've got a rally, base, rally, that's a CP, but see that there is no consolidation away. All this pattern over here, the very next candle is still touching it, there's nothing. So this is a peak, this is nothing. So there's nothing clear over here. So let me go and see. Let me switch the time frame so we can see textbook CPs. One sec. Over there. Okay. This is the monthly. So let me change the asset. Instead of random, let me use gold. Spot. Okay. This is gold. So on gold, let's use the weekly time frame. So on the weekly time frame, okay. On the weekly time frame, if we start from here, there's nothing, no CPs there, no CPs, but here we've got a CP. Okay, we've got the rally. Let me zoom in, sorry. Rally, large candlestick bodies, as you can see. 2 candlesticks sideways, 2 spinning tops, small 50% candles, and then price rallies strongly. Okay, so this is the continuation pattern. This is a CP. Okay, poor CP, but it is a CP. And then price rallies and then creates a basing structure and then a drop, legging base, leg out. That's a peak. Okay, this is a evening star, and that impulse has been holding for quite a few weeks, for almost 2 months and a half, without breaking all-time highs. Okay, so if we go back in time, okay, and we stop when we see small little candles over there, in this case 3 little tiny candlesticks. This is the large ERC. So this is a leg in for a CP, basing structure, the pause that we are talking about, always about CPs. This is the leg out, and all this is the consolidation away concept that we were referring to at the beginning of the lesson. So we've got 3 candlesticks. Those are responsible for breaking all-time highs. It was, the pullback didn't happen by a few ticks, okay? And then it just reversed with this large candlestick body. And this is an example of the valley, the drop rally scenario for the valleys, okay? Way larger than average candlestick and way larger than average. So this is a valley. This is what, if this had happened like here, okay, this wouldn't be a CP, even though it is an engulfing pattern, because the large candlestick bodies are way larger than the average ERC candle. So this cannot be a pause, no matter if it is located over here or on the way up on gold as it broke all-time highs. Okay. Though here we've got the same thing: rally, base, rally. So all these candlesticks over here are within the same price range. Okay. So that's the CP. The low should be covered like this. All these candles, once this rally happens, we've got these 50% candle over here, the first white one, then the next candles are within the range. We don't have full candlesticks closing higher or lower, so it is ranging. It's the same price area, okay? If we continue going down, we're gonna see another structure here, and this is the leg in, large candlesticks, okay? We've got two candlesticks, little candlesticks over there, and then we've got a large movement. So leg in, basing structure, leg out. So we would have the continuation pattern like that. So we could continue on and on doing this, but this is just as you can see, there are so many different price action combinations that what you don't need to learn the names of the candlesticks, okay? You just need to know structure wise what they represent, okay? Does this represent, okay, over here, a valley, or does it represent a pause in the market, continuation pattern, a formation that is sideways price action? So this corresponds to sideways. How do you call this pattern? I don't know, maybe it has a name, but we don't care. We shouldn't be obsessed with giving or remembering the names of so many different candlestick formations now they are available out there. You just need to analyze the structure, okay? Not paying attention to individual candles, okay? This is a structure made of 3 candlesticks, another one made of 2 candlesticks. At the top, we've got the shooting star, or you can call whatever you want. It's another structure made of 2 candlesticks, 3 candlesticks, 2 candlesticks, 2 candlesticks, okay? So how do we call it? We don't care. Price has been rallying for a long time. It's rally, base, rally, base, rally, base, rally, base, okay? Overextension. So after breaking this demand level of breaking all-time highs, we've got the supply level created on gold, okay? So going long now is not a good idea, okay? Because when price got there, it dropped, got there, it dropped, got there. Will it drop? Will it break all-time highs? I don't know. We are expecting this to be eliminated in the future, but we don't know when this is going to happen, okay? But what we cannot do is assuming that this is going to happen, because once we assume this is going to happen, we are going to start buying into it, and this could happen again, and you could have a loss. So you must differentiate between expecting something to happen in a certain time frame and asset, and assuming that this is going to happen. Because if you expect this to happen, okay, then you could be planning a long down there, which it didn't trigger because it didn't pull back, okay? You were expecting this to happen, okay? So you expect and you sit on your hands and wait for that imbalance to be reached because it's quite strong, okay? But if you assume that this is going to be eliminated, then you're going to be buying into supply level, and when you do that, this could happen and you might incur in a loss, okay? And this is what you're going to have to be avoiding all the time, okay? Like saying, okay, this could happen, I am assuming this is going to happen, then you are going to be in trouble. So what you should do is sit in your hands, browse all the assets that you have on your watch list, and then as you go down on the watch list, you are going to bump or come across with clear scenarios, textbook, and those are the ones you need to take, okay? Not buying into an obstacle. It's like you are driving a car on a highway, okay, and then you see an obstacle here, a toll service, whatever, and what do? You slow down. You do not accelerate and bump into the toll service or the policeman controlling traffic. You don't do this. You just slow down and wait, okay? The policeman tells you, okay, you can pass, okay? You pass. When you pass, an imbalance will be created, okay? So it is super important understanding the differences between assuming and expecting once an obstacle has gained control, okay? Once an obstacle has gained control, forget about it. Keep on watching, going down your watch list, and you will find the textbook scenario, okay? In the meantime, just enjoy your life. Okay, I think this is enough for CPs. You need to practice a lot, and I will be available for you if you are in the coaching program. Have a great day.